If you're a business owner or real estate investor in the US, you need to comply with the Corporate Transparency Act by January 1st, 2025, or you could face $500 a day in fines, up to $10,000, and even 3 years in prison. The CTA requires almost every business in the United States to report who owns and controls the company. Filing this report is now as important as paying your taxes. In this video, I'll explain what the Corporate Transparency Act is, who needs to file, and how to do it step by step. By the end, you'll know exactly how to stay compliant. The Corporate Transparency Act is a law designed to stop crimes like money laundering and human trafficking. It requires U.S. corporations, LLCs, and other businesses to disclose their beneficial owners, the people who own or control the company. The goal is to prevent criminals from using fake or anonymous businesses to hide illegal activities. However, this new law adds extra steps for law-abiding citizens like you and me. Here's what you need to know. Existing companies, meaning those formed before January 1st, 2024, must file a BOI report or a beneficial ownership information report by January 1st, 2025. If you form a company after January 1st, 2024, you'll need to file within 30 days of setting it up. Any changes to your business, like a new owner or an address change, must be reported within 30 days. This is an ongoing requirement, not just a one and done deal. So what do you need to report? For the business itself, you'll need the company's legal name, any trade names or DBAs, the business address, the state where the company was formed, and your tax ID number, like a TIN or EIN. For each beneficial owner, you'll need the full name, date of birth, residential or business address, and a government-issued ID, like a driver's license or a passport. You'll need to upload a clear image of the ID. Now, some companies are exempt from the full BOI filing. Large companies with 20 or more full-time employees, 5 million in gross receipts, and a physical office in the US don't need to file. Older businesses formed before January 1st, 2020 that have no income, assets, or operations are also exempt. Publicly traded companies that already report to the federal government don't need to file either. However, even if you qualify for an exemption, you must still submit a report explaining why you're exempt. If you don't file or you provide false information, the penalties are steep. You could face $500 a day in fines, up to $10,000, and possibly 3 years in prison for intentional violations. This isn't something to ignore. Filing the report is not difficult. The easiest way is to go online to boifiling.fincen, that's FINCEN.gov. Fill out the form and submit it electronically. I'll also drop a link in the description of this video. If you find it confusing, you can hire someone to help, but the process is simple if you have the required information ready. While this law creates extra work, it also creates some privacy protections. Your information will not be public. Only authorized entities like law enforcement or banks with your consent can access it. Nosy competitors, creditors, or private parties will not be able to see your BOI data. There are strict penalties for unauthorized access, up to $250,000 in fines and 5 years in prison. This law is also a good opportunity to clean up your business records. Many business owners have old LLCs or corporations they've forgotten about that are still costing them money in state fees. Use this as a chance to review your entities, close any you no longer need, and streamline your business structure. Cleaning up your records can now save you money and simplify your reporting in the future. The CTA only applies to US registered entities, so offshore companies are exempt. These can be used for legitimate purposes like holding international investments and provide an additional layer of privacy. However, offshore structures should always be used responsibly and in compliance with tax laws. The Corporate Transparency Act requires most US business owners to report their ownership and beneficial interest structure and keep it updated. It's not optional, and the penalties for ignoring it are serious. Take action now, gather your information, file your report, and stay compliant. If you need help, reach out to a professional who understands these requirements. If you like this video and want to learn more about the ever-evolving legal landscape and compliance requirements, hit the like button and let me know in the comments what topics you want to talk about next. Thanks for watching. Don't forget to subscribe for more videos every week, and I'll see you next time.